if you're not in the market, tracking, looking, it doesn't mean you got to buy the next thing you see,
No.
but you got to be there.
Well, there will be opportunities for investors or for real estate agents who want to get into the real estate market.
It's like buyers saying, you know, I just want to pause right now. I want to take a step back. I want to take a break. Arguably, could it be the biggest mistake of their lives?
Here we are 60 years in. If we could look back and sort of get your reminder of how you guys started back in the day. And I know Granddad and you kind of fell into the business a little bit on the brokerage ownership side. And so if you could maybe just remind us.
Well, when we started, as I mentioned earlier, it was a hot market.
Yeah.
In 65, 66. And of course, we went through many ups and downs, and I guess started to deteriorate in the late 80s and ended up bottoming out in 95. And when it got slow, we looked for means to increase our share of the market.
So yeah, it's interesting you mentioned that because we're seeing that today where, you know, people are doing open houses and they're getting a ton of interest and action. And, you know, we don't do print advertising. You were talking about investing in advertising. I remember those ads we used to take out in newspapers because we didn't have social media, right, and we didn't have the internet, and we didn't have realtor.ca
to promote it on.
Promote it. And none of those tools existed.
Were not available. At all.
And now, you know, back then, you know, the only way we could get there is to put ads in newspapers and magazines.
So the social media then generates the clients to the open houses today?
Yeah. Like this is the agents that are consistently promoting on social media, right, are driving people to their open houses. And as well, because of the fact that realtor.ca and LePage.ca, the two biggest websites in the country for real estate, you can post your open house that you're hosting this weekend.
Dates, times.
On their site.
On the site, and then people are going there. So you have this incredible tool that's free, right?
Yes. Yeah.
That every consumer on the planet can see. So it's doing exactly what we used to have to pay for.
That's right.
But the key is doing it, of course, is as you said, like that's what we turn to is, okay, you know, when the market's hot, you're not having to do as many open houses.
Right. So the agents now have to spend more time developing listings or looking for open houses and make sure that they're publicized each weekend.
Yeah, absolutely.
That will generate more leads for them and give them an opportunity to grasp a better hold of the market.
With social media, you can geo-target now. That's the only cost, and it's nominal. You can geo-target. If you have an open house in a specific area, you can geo-target your social media content to that area.
Okay.
So anybody on their social media or a local person in that area that evening is scrolling through their social media, your ads,
it will pop up.
Populate, hey, open house this weekend.
Yeah.
Yeah.
I remember back in the 90s as well, you know, we were trying to figure out, you know, who's in the market. And it was really a good time for first-time buyers because prices had pulled down. Yep. I mean, they peaked in 89. And then to your point, it didn't bottom till 95.
Quite a bit later.
Quite a slide.
Couple of years.
But in that time, there was great opportunity for first-time buyers. And I remember that those were the clients that you really wanted to, you know, speak to. Those are the people you wanted to help because of the opportunity that it was. You know, if you owned a home at the time and maybe you paid, you know, higher for it 2 years earlier, you're thinking, well, you know, you're not going to move. You're going to wait it out as you should. But people that were coming into the market now had, you know, better interest rates like we have today than we did 2 years ago, and lower prices. Yeah. And so I mean, I remember us talking about that, and again, advertising for those first-time buyer-style properties.
Now, there will be opportunities for investors or for real estate agents who want to get into the real estate market, and it may not be right now, but it's coming. And anyone who's in the industry now can keep their eye on the market and will get a feel for when it's bottomed. And that's when they want to take their investors back into the market or themselves.
Yeah. And I think we're seeing it today with, the market as a whole. You have to go in and find those opportunities. Like you said, when you're in the business in particular, you can, if you're really paying close
It's
attention,
easier to spot them.
much easier to spot them. And I know that's what you've done over the years is you pick certain times
We
that,
watch the market very carefully.
yeah,
And when you're looking at it every day, you get a feel for when it's actually bottom.
yeah. We're seeing that today with in the condo market, with resale condos in particular, where our clients are carefully finding specific properties. I can think of one example just this past week where one of our agents was doing exactly what you said. They were watching closely. They honed in on a couple of buildings and watched carefully, kept looking at the properties coming available, watching a few things sell, and something came up and he thought, I think this is a good opportunity. Called the listing agent, had a great conversation with them, found out that there was some motivation from the other side, and really did a phenomenal job for their buyer. And that was that idea of knowing the market and picking the time.
Also tracking. You can maybe have 8 or 10 properties that you're following, and you can watch them gradually reduce the prices if they need to sell.
Yeah.
And just keep your eye on them on a daily basis, and you'll know when the right time comes.
The resale numbers too, you're finding now where rents have softened a little bit, but you have maybe longer term tenants that have been in these resale properties that are maybe paying slightly higher rent. The math now is starting to make a little more sense. Yeah. And so you can buy a property, maybe somebody who's looking to get out, but you can buy a property with an existing tenant and just the tenant's happy to stay and the rent's been great.
Yeah. That's what you have to weigh. You have to look at the rent as to the value of the property and what your cash flow is. And you'll find that there probably will still be a negative cash flow.
I was just going to ask you about that.
But that's not so bad, as long as it's manageable.
Yeah.
It's very difficult to find properties that are going to cash flow right away. But if you wait, the market's going to continue to go up and you'll lose that bump. So you're best to try and absorb a negative cash flow for a year or two and enjoy the rise in the market as it recovers.
Yeah. And I was just going to ask you, because I know you taught Jeff and I that very early on, was, don't be surprised that every investment property you look at has a little bit of negative cash flow on day one. And I think every one we bought was just like break even or a little bit of negative cash flow. But to your point, it just, after a year or two, it seems to click over.
I learned the hard way when I started. I was trying to find properties that would break even.
Yeah.
And every time I turned around, it was cost more.
Because you waited.
I waited.
Yeah.
But I kept trying to find something that was going to work. Finally, I said, okay, that's enough of that. We're going in with both feet.
Yeah.
And sure enough, there was a small negative cash flow, but it works itself out in 2 or 3 years.
Yeah. And, it's interesting when you bought, your first investment properties, it was the same feeling like we probably have today. I mean, the prices were certainly a lot different when you started. But,
so interesting hearing about the negative cash flow.
Negative cash flow. The math always works out the same way.
The trick is to be able to pick the right spot on the market to buy. And if it's not happening now, it's going to happen in the next 12 months.
Yeah.
So everybody should be tracking properties carefully and watching for the right time.
Well, I think that's it. To your point is if you're not tracking it, if you're not in the market, tracking, looking, it doesn't mean you got to buy the next thing you see.
No.
But you got to be there.
Watching.
It's like buyers saying, I just want to pause right now. I want to take a step back. I want to take a break. Arguably, could it be the biggest mistake of their lives?
Yeah.
By, say they're missing out on, by just not keeping that toe in the water, that oar in the water, just to keep in the market. So they know when they see that opportunity. They're not starting from scratch again when they want to start looking 6, 8, 2, whatever, how many months. They want to
great
pause
advantage.
For. Yeah.
Yep. And also getting out and actually inspecting the properties is important. Getting inside. I always remember trying to buy the worst looking properties because that's where the value ended up being.
Yeah.
Because it's the last one that people want to buy.
Yeah.
So as an investor, you look for something that's tired, needs help, because you know people are going to ignore it. And that's why the prices will keep going down on those.
Yeah. That's a great point. And we've always, again, the advice you've always given us is look for the worst one on the street.
Yeah.
Yep.
Because it gets overlooked.
Gets overlooked, and it's really just probably paint and
A little elbow grease.
yep, and it brings it right back.
Yeah. And, it's hard to pick because everybody, well, when do you buy? When do you buy? And you mentioned, you've got to, suss out the market and understand. But over time, it's hard to pick the bottom. You want to try and avoid the top. You mentioned you missed some opportunities before you finally realized that you better get out there and do it. You've always told Jeff and I that it's really the time in the market. It's the years of ownership that is really
Patience.
critical.
Yep, having patience in the long run is what works. I mean, if you're in the market every day watching, you'll know when it's bottomed out. It'll just come to you automatically.
Yeah.
But on the other hand, your point is at some point you've got to get in, and long term will take care of everything.
Yeah. Yeah. So in terms of the evolution of the real estate industry, I know we've talked about this already, but I just wanted to circle back to that. You said in one of our conversations that really the fundamentals haven't changed in this business. And I know I've said to our signature team in the past, you told me one thing I'll never forget. Early day one, I think you said you have somebody in your car every day and you're going to do deals.
True.
And I don't think that's changed.
No.
The process of what, we're not driving people around as much as we
Booking
used
appointments.
to. But that's right.
appointments, yeah.
That's really what the fundamental.
And that goes back to what we started the conversation with is right now in a down market, you've got to do more open houses. So you're talking to more people. And all of a sudden, then you are going to have people in your car. And away you go.
Yeah. Some things never change.
That's right. Well, the technology is changing things quickly. As
Yes.
Yeah.
you fellas are seeing
Sure.
every day with AI coming along and making it certainly a different approach to the real estate business.
But that basic fundamental of talking to people every day.
Yes.
That has not
There's
changed.
no-
No,
and
Probably
building relationships.
never will.
Yeah. Yeah. And if you kind of look forward to the future and observe what's going on, what's sort of does much change from here, or these fundamentals will always carry us through, or?
I don't think it's going to change. I think real estate is probably going to continue to go up in value. Maybe not on a straight line like it has for the last few years, but the cost of building has gone up. So the end result, it's going to be a lot more expensive to build. So I see prices continuing to increase, technology becoming probably more important than it ever has been in our industry. I think agents are going to have to embrace that if they want to be successful.
Yeah, I agree.
I had a question the other day, or from one of our agents the other day, about somebody who wanted to buy with their sibling, with their sister, funny enough, and they wanted to own something. They thought now was a great time to buy a condo, resell condo on the market, and then maybe sell it in 3 years. Based on your experience that you experienced in the 80s and then through the 90s, and then comparing it to today, would you lean, yeah, that's a great idea, get in and get out? Or what would your experience tell you about that kind of process?
My experience would say go in for the long haul. I don't think you can look at it in a 2 or 3 year period. We don't know what's going to happen in 2 or 3 years. Plus the fact the longer you're in it, the more value you're going to have. And that's what you're trying to create here is equity. So if you're patient, the long run is where you want to be.
And is that 10 years, 20 years, or forever?
I think it's forever.
Yeah.
The longer you hang in, the more it's going to be worth.
Yeah.
So, and we've seen that over the years, people who have gotten out a little early or have gotten out at the bottom of a market, it's cost them a lot of money. So you have to be patient in this business.
So in terms of the data that we watch, like what do you look at if you're thinking of, the signals to different points in the market? Like Is it months of inventory? Is it how many listings are around? Is it the transaction volume? Is it just price? Is it interest rates? Are there certain factors
I
that
think it would be volume of listings.
Yeah.
I think that's pretty important. If you look at when the market was hot, there wasn't much around. Now the inventory is building. So as the inventory continues to grow, you probably know prices are coming down.
Yeah.
So if listings are getting higher each month, that's probably a good sign in the long run if you're going to become a buyer.
and then once you start seeing that listing volume start to drop, then prices will start to rise.
You might
After
want
that?
to, yeah, I think you'd want to catch the market before that happens.
Yeah.
I think you'll get a sense of when it's leveled off, and that's when you'll want to be jumping in as an investor and probably as a buyer today.
That makes sense.
And we may be getting close to that right now.
Yeah.
What is the volume right now?
We're at
have we got?
27,000.
27,000, nearing 30,000.
Yeah,
listings,
that's getting up there.
Yeah.
So we may be reaching the top now.
So Dad, when you started, in any market you're in, you've always seen those discount models, low service, low fee
Yeah.
models. No matter what the market, no matter what year it was, that competitor was always there
Right from the start.
right from the start.
Yeah.
So how did you differentiate yourself when?
Probably by providing more advertising and services to the agents. And over the years, the discount brokers have all struggled. We've seen this, and they've come and go, and the regular companies like ourselves are still here 60 years later. So it seems to work when you're willing to stand behind your agents and provide them with the tools they need to be a success.
Yeah. It's interesting because the complexity of this business is hard for people who are not in the industry, I find, to really see, because they get the benefit of a professional realtor showing them real estate, listing their home. They don't see all the behind the scenes work. And I know that your premise from day one has always been, and you've taught us, is you've got to support your realtors from day. It's by hands down, that has been the focus, and stand behind them. And as you've always said from the very beginning, your word is all that matters. Yeah. And the value of that, over the years has been, served obviously us incredibly well. Mm-hmm. And the service level that we've focused on has, and the path we've chosen has always been full service. For that reason. And, you've seen it over the years evolve. People come and go in different industries and or different business models come and go. But, here we are.
Full service and integrity will always win.
Always wins in the end.
Yep.
Yeah.